We are joined by our Director, Education and Training, Mrs. Elizabeth Musukwa. So before Mr. Musonda commences with the presentation, I'll hand over to the director to give us her remarks on this important exercise. Over to you, Director. Thank you.
Thank you very much, Andrew, and good afternoon, ladies and gentlemen. I hope I'm audible.
Yes, you are both audible and visible. Thank you.
Okay, thank you so much. So, ladies and gentlemen, good afternoon, and welcome to yet another examination techniques meeting. So, the Zambia Institute of Chartered Accountants is very ready to ensure that we support you throughout your journey towards becoming a chartered accountant. And therefore, examination techniques meetings are part of that process to ensure that the support is fully given to yourselves. We have a series of examination techniques meetings this time around, and today our focus is on CA2.1 and DA8, which is financial reporting. Now, we must all appreciate that financial reporting is very core to an accountant, and it serves very essential functions in accounting, chief of which are communication of financial information, where it provides a structured and standardized way for accountants to communicate the financial performance and position of an entity. Also, financial reporting is the basis for decision making, and accountants use these financial reports to provide accurate, timely, and relevant information to stakeholders. And it also supports internal decision making and also to guide external stakeholders such as investors and creditors in assessing the health and viability of the organization. Aside from that, financial reporting also ensures compliance and accountability. And at the heart of compliance for us is compliance with accounting standards, which is the IFRS, the GAAP, and also legal regulations. And we also need to ensure that we demonstrate accountability and stewardship over our resources entrusted to management. Financial reporting also supports the audit processes and financial transparency. Then financial reporting is also looking at historical record and evidence, and it is serving as a systematic record of financial transactions, also providing a basis for trend analysis, forecasting, and benchmarking. Lastly, ethics. As accountants, ethics is at the core of the profession. So, to an accountant, financial reporting embodies the profession's ethical commitment to integrity, objectivity, and accuracy. And it's not just about numbers, it's about presenting a true and fair view of the organization's finances, avoiding misrepresentation and also manipulation. So, in summary, we are saying financial reporting is the language of business to an accountant. It's a tool through which there is a translation of complex financial data into meaningful information that can drive informed decisions, ensure transparency, and uphold the integrity of the profession. Now, as Zika, we want you to pass. Okay, our aim is to ensure that you are ready to do your part, acquire the knowledge, and adequately so, be able to demonstrate it through the examinations that we set before you. Please take these examinations seriously, and also the sessions before these examinations are very vital. Apart from the examination techniques, we are also providing the examiner's reports. We provide the examiner's videos. We wish to take this opportunity to remind you that you need to take advantage of these resources that we have and go through them as you are trying to prepare for your examinations. Of course, the examinations are not easy, they are challenging, and we just want to ensure that we have prepared you for the financial world that you are getting yourself into. We have Mr. Boniface Musonda in our midst. I don't know, Andrew, if he has now been able to join us. I still
He's
can't
yet
see
to
him.
join in.
Yes. So he is a technical expert in this area, and we expect that he will be able to give you the nitty-gritties of how to tackle the financial reporting examination. Examinations, ladies and gentlemen, is not only about the technical matters that you'll be tackling. You also need to be able to manage your time, ensure that you divide your time adequately throughout the questions that you are tackling. And ensure that you remove the nervousness. More often than not, it's not because we do not know the subject matter, but we go in too nervous to be able to tackle the questions. So let's ensure that we remove the nervousness, the anxiety. We know that you are able to handle it. And as Zika, again, I emphasize, we want you to pass, and we want you to join the group of chartered accountant, the CA Zambia group that we have. We now have 191 CAZMs, and we are looking forward to all of you joining that group. So take your time and ensure that you are ready for this particular examination. And we hope that in the next 2 weeks, you will be able to ace this particular examination. Thank you so much.
Thank you so much, Director, for those opening remarks. Students, as you have heard, indeed, financial reporting is the language of business. You will learn a lot from this paper. You are given the tools, the competences that you require to provide that information. I mean, the financial information that you provide to the various stakeholders. And so to add more to this, or to exemplify what has been summarized in here, will be Mr. Musonda, that will be joining us shortly to give some of the technical issues that you need to be on the lookout for as you write your exams. So we implore you to pay attention the moment he begins his presentation, so that you get out of this meeting as much information as possible. And as director has emphasized, please make sure that you make use of these opportunities that are given on to you. So for those of you that are writing more than just financial reporting, we have other meetings scheduled for the June session as part of the preparation. So you will note that on Wednesday, or rather on Thursday, we shall have management accounting. Then on Friday, we shall have financial management, while next week, Monday, has been reserved for auditing. So for those of you that are writing any other paper mentioned, please make sure that you make time for these sessions as well. For now, we wait for Mr. Msonda to come through and run us through the presentation. Thank you.
Namona. Sigaw siya. Ang lot. You did go come. Go come. But
Good afternoon, Mr. Msonda. Hello, Mr. Msonda, you can unmute. I can see you are in the meeting.
Huh? Oh. Klik meeting, bos. Kuzika. Apa inakuja hawa hapa tu. Kwa Zoom. Mana tuh itu? Nafaka udara. My examination.
This filming you're doing.
I've seen.
And Diak again. Diak and Diak. Ugachakorwa. Kamu kombon kitu kombon man. Dressing no gani hapo dressing itasema wale patikana. One month. Hello, how are you? Okay, good. I wanted to find out, do you have a 185, 55, uh, yeah, 185, 185. Yeah, 195 can go on the 185.
Good afternoon, Mr. Msonda. We can see the document you are sharing, but we cannot hear you.
Okay. Just a moment, Mr. Katungu.
Noted.
Mr. Katungu, is it visible?
Yes, the presentation is visible and you are audible.
Okay. Thank you very much. My sincere approach. I had a challenge with internet connectivity issues. My sincere approach. Now from my side, I'm ready.
Thank you so much. We did have an introductory talk by the Director, Education and Training. We can now move on, straight into your presentation. Thank you.
Thank you very much. I wish to apologize for starting my presentation late due to network. I wish to welcome everyone to this presentation and hope it will be very helpful to you as we'll be interacting. So as earlier on introduced, I'm Msonda Boniface. So we are going to interact in terms of the examination techniques presentation. Okay. In terms of the presentation layout, I'll start with introduction, then I'll end with the conclusion. Examination techniques basically is aimed to improve the poor performance. It has been noted by our institute that the performance, most in financial reporting, DA8 and the CA2.1 has not been well. Hence, they have organized this presentation so that we can see how we can enhance the pass rate. The objective is to orient you to, in terms of the examination preparation for June 2025 and those who intend to write in future. The examination techniques is going to help you in terms of answering questions. Of course, you can have knowledge, but you are going to fail the exam. Why? Because of poor examination techniques. Hence, this workshop is very, very important, and I wish to encourage you that you must ensure that you pay particular attention as we'll be interacting through this presentation. There's a misconception that the pass rate is regulated by the institute, which is a misconception. So basically, as you come here, come with an open mind that the pass rate is not regulated by our regulator. This is very, very important. Forget about what you passed, maybe you failed the exam last semester or last sitting. Now be positive as we'll be going through the presentation. Let's check the performance for December 2024. As you can see, for D8, that's where the lowest was 4%, then the pass rate was 27%. Then for March 2025, as you can see, I don't know if it's the same person who got 4% in December 2024, or maybe another person is the one who got 4%. Then you can see the pass rate is 12%. That's why our institute is very concerned, because if they are getting 12%, then it means 88% failed, which is not a good image for our institute. In terms of the learning outcomes for financial reporting, which is D8 and CA2.1, one learning outcome is basically the preparation of financial statement, which can be either for public or private sector. So you have to know how to prepare the financial statement. Then we talk about the components of financial statement. When say financial statement, we are like statement of financial position. So we have to know, why do we prepare? We want to know the position of the business. And in that case, what are contained there? So we are going to see what are contained are assets, liability, and equity. Then of course you have to know how to prepare the financial statement for a single entity. So when say a single entity, we are referring to a published or a company. Then whether you like it or not, even the exam you are going to write in June, the first question will be on how to prepare the group financial statement, famous consolidation. Then we'll talk about also the financial analysis, referred to as the ratios. It's very, very important to know the exam format before you can even go to the exam. D8, as you are aware, section A has 2 compulsory questions. Then section B, you have to attempt 2. Then each question is 25 marks. Why am I emphasizing? Noted that student will only answer question 1 and don't answer question 2, which is a compulsory. Then they'll go and choose 3 questions in section B. In terms of CA2.1, section 1 is compulsory, which is 40 marks. Then from section B, you choose 2. For each question is 20 marks. So it's very, very important that you know the format and you are advised to attempt required number of questions, which is very, very important. As you'll be answering the questions, it's very, very important to pay particular attention to the command words or the verbs. Why it's important to know the verbs or the command words? Then you know what you'll be instructed in the exam. For instance, you may be asked to calculate. When you say calculate, simply to compute. Then when you say analyze, you go in detail. Then you may be asked to advise an appropriate course of action. So it means they'll be asking for the advice. So what's the message for you? Financial reporting, it's at application level. So basically, we're expecting that you are going to apply the standards or the theories as you'll be preparing the financial statements. So at your own time, you can find time to go through the verbs. What are some of the commonly highly examined area which you must prepare yourself before you can go and attempt the exam? As I indicated earlier on, the first question will be on consolidation. For CA2.1, it will be 40 marks. Then for D8, it will be 25 marks. Therefore, this is a must. Another area is how to prepare financial statement for a single entity or for a company. Now, IAS 1 will simply give you the format. But in terms of the computation, in order for you to come up with the figures which must be shown in the financial statement, you have to know accounting standards. Another area, cash flow. You have to know how to prepare the cash flow. Then also conceptual framework for 2018. It's highly examined. What are the key areas on a conceptual framework? You have to know the definition, which is a generally accepted theoretical frame of reference in financial reporting. You have to know the chapters. There are 80 chapters. Now, it's not about listing. In the exam, they won't ask you to list, but to explain. So the advice I'm giving you, ensure that you know the conceptual framework and 80 chapters. Another important area, ratio analysis. If you check even for March exam 2025, in both CA2.1 and DA8, there was a question on ratios. Financial instrument IS32, it's highly examined. If it will come, what are they going to test you? It talks about a presentation of financial instrument. We present according to substance. What's the meaning of that? If it's an asset, present under asset. If it's a liability, you present under liability. You are going to see when I go through the examples I've prepared, it came last sitting for CA2.1, where they had tested on a compound instrument. So what must you prepare? What are the key areas must you take note on IS32? If it will come, there are three areas. One, preference shares. If it's redeemable preference shares, you present it under liability. If it's irredeemable, you present under equity. The next point or area they will test you in the exam is basically where do you present interest and the dividends. So basically the guidance is when you are presenting interest and dividends. Hello, am I audible enough? Hello? Hello, are you getting me?
Yes, we are.
Okay, thank
Yes,
you.
we're getting you.
Okay, great. Yeah, so when you go to IS32, I will advise you what to be tested. One is on the issue of redeemable preference shares. You present under liability. If it's irredeemable, you present under equity. Number two, what they will test you. When you are paying interest or dividend on a liability, you present in the income statement. If published will come, I know there will be liability. So the interest you are going to compute, you present in the income statement. The last part they will test you is convertible loan or compound instrument. So when you say convertible loan or compound instrument, it has got two characteristics. It has equity and liability. I've given one example as I go through what was tested in CA2.1 in the March 2025. So what are you supposed to do? You split between equity and liability. How do we split? First, you have to determine the present value of liability. Then the residue is what will be equity. And after splitting, equity will be constant, then liability will be amortizing. So these are the three areas you are expected to be tested in the exam. In terms of IFRS 9, at financial reporting stage, you are like to be tested in terms of recognition. We recognize upon being a party to a contract. Apart from that, you are going to be tested in terms of measurement and classification. Hello? Hello, am I not audible enough?
No, we can get you, sir.
Okay, thank you very much. The next one is IFRS 15, which is revenue from contract with customer. This one came last sitting in CA 2.1. According to the new standard on revenue recognition, which is IFRS 15, you recognize revenue when or as you satisfy the performance obligation. So what's the message am I giving you? Go through the 5 steps. Another one is the IFRS 13, which is on fair value. So you must know the definition of the fair value. Then in terms of also fair value ILAC. IFRS 16 leases. This is a new standard. Normally I refer to it as an entertainment area. You are going to be entertained as you'll be writing the exam. So basically the chance of coming across leases, IFRS 16, I can say it's above 90%. So as you are preparing for the exam, what must you take into account? In the books of LSC, you have to recognize a right of use and the lease liability. Then when you go to, in the books of LSR, the accounting treatment will depend whether it's an operating lease or finance lease. Now, what's a finance lease? Is where substantial risks and rewards have been transferred from the LSR to the LSC. So if it's a finance lease, the asset must be derecognized and account for the net investment. If it's an operating lease where the risks and rewards have not been transferred, then in that case, the asset will continue appearing in the books of LSR. In case we haven't gone through IFRS 16, basically when we say LSR, we are referring to the legal owner of the asset. So if it's an operating lease, the asset will continue appearing in the books of LSR. Then we account for the rental income on a straight line basis. IS-12, whether you like it or not, you will come across it in the exam, mostly under published or company. So under IS-12, you have to know the current tax and deferred tax. When say current tax, what are we referring to? How is it going to be tested in the exam? They will give you estimate for the year, which you have to take to profit or loss. Then you take also to financial position. Then in the trial balance, that's why you are going to find under or over provision from the previous year. If it will be on a debit side, it means last year we under provided. So you have to increase the expense for the year. If it will be on a credit side, it means last year we over provided. Then what are we supposed to do? We have to reduce the estimate for the current year. In terms of consolidation, there are this key standard, IFRS 3, is how to compute goodwill. Of course, whether you like it or not, there will be issue of computing goodwill, and the requirement in the books of the acquirer, or in other words, the parent, you have to measure all assets and liability at fair value. So ensure to revise the forms of consideration like deferred consideration, contingent consideration, and share exchange. IFRS 10 is how to consolidate a subsidiary, where you account for it as a single economic entity. IFRS 11 is on a joint arrangement, where you may be given a joint venture or joint operation. IFRS 12 is a disclosure of interest in other entity. So basically the message is, if the company has invested somewhere, they have to disclose. IS 27 is a separate financial statement. At this level, if there will be cost of investment, it's likely to be at cost. IS 28 is investment in an associate and joint venture. At financial reporting, if they will give you 3 companies, just know that the first one will be a parent company, the second one will be a subsidiary. How are you going to account? Use a full consolidation. Then the last one will be an associate, where you are going to use the equity accounting. In terms of non-current asset, ensure that you revise IST, which is on property, plant, and equipment, and pay particular attention in terms of revaluation model. When you revalue, what's a double entry? Then apart from that, you must also ensure that you revise IAS 20, accounting for government grants and disclosure of government assistance. Then also there is IAS 23, which is on borrowing cost, IAS 33, IAS 38, intangible asset. If intangible asset will come, what are you likely to be tested? Research cost. Research cost, always you have to expense. Then for development cost, we capitalize. When say capitalize, show it as an asset, as a capital expenditure. If it will meet a mnemonic of pilot, it should be probable that an entity will receive economic benefit. There must be intention to complete the project. Then initial measurement, of course, we measured cost. Then subsequent, you can use a cost model or revaluation model. Then instead of saying depreciation, we refer to amortization. And we amortize those assets with the finite useful life. IS 36, you are likely to be tested. Even last sitting, it came in D8. IS 36 is only impairment. Now, basically, what is impairment? Is when the carrying amount is more than recoverable amount. Then also it may be tested on how to allocate impairment loss to a CGU, which is cash generating unit. IS 40 is investment property. It's a friendly standard. The key message, if IS 40 will come, initial measurement, we measured cost. Then subsequent, we can use a cost model or fair value model. Now, if it will come, you are likely to be tested on fair value model. Now, under fair value model, what are there are only 3 key principles. 1, if you are using fair value, there is no depreciation. That's 1 point. 2, if there will be a gain or loss, you report in profit or loss, not other comprehensive income. Then you determine the fair value at each reporting date. IS 41, it was tested last sitting. It's on agriculture. So it covers 3 items, biological assets. I was surprised when I was going through examiner's comment. The examiner indicated that student failed to answer a question on the biological assets. So basically biological asset, these are the living animals or plants. Then apart from that, also talks about agricultural produce, those which you get from the biological asset. And of course, the grant measured at the fair value. The last one you are likely to be tested on is on IASC 37, which is on the provision. So IAS 37 is highly the IAS 37 is highly tested. So you have to know what is provision. You have to know what is the contingent liability and the contingent asset. So it's very, very important that you know those three areas. Now you are going to see, I've given an example on that one. Okay. The other one is IAS 1, which is on presentation. Now take note, published is not only about IAS 1. IAS 1 will simply give you the format and the content. But how to come up with the figures, you have to know other accounting standards. That's why some lecturers, what they do, they'll simply give you a question, then you start answering. That is very, very dangerous because you simply memorize. So what's the message am I giving you? Know accounting standards if you want to answer a published question. IS2 is inventory, which we know we measure inventory at a row of cost and the net realizable value. IS8 is accounting policies, estimate and errors. Ensure you know what's an accounting policy, estimate, and an error. The key thing, when you change an accounting policy, we change retrospectively. Then you have to know IS10, events after reporting. We talk about adjusting and non-adjusting event. IS21, it's the effect of changes in the foreign exchange rate. At financial reporting, if they will bring IS21, they will test you at individual stage. What's I mean when say individual stage? Is where like Zika. Zika has got no foreign subsidiary. So they may acquire an asset in a foreign currency, or they may earn income in a foreign currency. So how do we translate? You are going to see when we go through the examiner's comment for March, both D8 and CA2.1, the performance was not favorable in relation to IS21. So take note, IS21 is examined. IS33 is on earnings per share. So in short, you know, it's only for listed company, and when you are computing, you have to compute the basic and diluted earnings per share. IFRS 1 is on the first time adoption. Then IFRS 5 is on non-current asset held for sale and discontinued the operation. Then IFRS 8 is on an operating segment. In terms of effective examination techniques, in terms of examination techniques, what are you supposed to do? You have to know their examination text. You have to know before exam, just before the exam, and during exam. So let's go through examination techniques before the exam. So what are we supposed to know? Know the syllabus. Please, you must ensure that you know the syllabus. And what will be tested, it will be from the syllabus. So this is very, very important that you have to know the syllabus and also you conclude the syllabus. Okay. Apart from that, is the chief examiner's what? Comments. Chief examiner's reports are very, very important. Why are they very, very important? They will give you areas where students made mistakes. And you should not be surprised if they can test the same area. So it's very, very important that you know the you go through the chief examiner's comment. I will try to go through the comments which came. So take note. You must ensure to go through the chief examiner's comment. What else? Ensure that you cover the entire syllabus. Ensure that you cover the entire syllabus. Please, you are not there to start predicting. I was chatting with a student who was saying, no, I'm going through the past paper to see how the equation have been coming. So I know last time consolidation come, then it won't come. I said, oh my goodness. So take note, as a student, you are advised to cover the entire syllabus. And personally, of course, I'm a consultant. I do not encourage a student to write financial reporting within 3 months. That is dangerous unless you are repeating. Why? Because it means you're not going to cover the entire syllabus. Then you are encouraged to form the study group. This time you can do physical or virtual. Then, of course, it's very, very important to have interest. Just before the exam, ensure that you have got enough rest. It's very, very important. Then also, there are some advice we give you, but you don't take them seriously. In terms of examination docket, this time, as you are aware, there's a challenge with internet. You start running, like you had seen what we experienced before we started our discussion. I had a challenge with internet because you start now panicking. Even myself, I started panicking until I had to go and look for a laptop somewhere. So print in advance. Then also reach in good time in terms of the venue. Of course, be ready to answer any part of the syllabus. This is very, very important. During the exam, ensure that you work on your time management, and the recommended is 1.8 per mark. So I'm sure if it's 40 marks, then you multiply by 1.8. Because the temptation, you only answer one question or two questions, then the chance of passing may not be there. Also, it's very important to write. You are required to number questions attempted. Like question 1, is it question 2, question 3. So always what we encourage in the exam, again, there's misconception that always you have to start with question 1. No, start with the question which you are comfortable to give you confidence. You can even start question 5 as number 1, provided you write this is question 5. Then of course, present neatly. Avoid unprofessional comments. This is what I've come across through the time I've been a consultant with the institute. You just waste your time. Instead of saying, no, God bless with the marker, you just waste your time. So what's the message? Focus on what is important. Then you are encouraged to attempt every question, every part of the question. The most important point, like if you check D8, what came last sitting, there was a theory part. We are going to see when we go through examiner's comment, they indicated most students did not answer the theory part. They only answered the computation. So it's very, very important to attempt every part. Most of the theory part is very easy and less time consuming. Then it's very, very important to show the workings. Now, sometimes you find most for consolidation, I will try to guide you where you just write the answer without showing the workings. You lose out. So take note, the marker will be there to mark what you are going to write. They won't start thinking for you. This is very, very important. Now we go through the common mistakes which were made from the last sitting, which is D8 and the CA2.1. My humble appeal, I wish to encourage you. This time you have to download the past paper and the chief examiner's comment. Then you attempt, then you go to the chief examiner's comment. I can assure you, if you can just revise CA2.1 and DA just for March, which came, understand, go through the examiner's comment, I can guarantee you will get 50%. What was the comment for, we'll start with the CA2.1 for March exams. The performance was poor. The lowest score was 4, honestly. How can you get 4? I'm going to give a clue. If they will give you 2 companies, the first one is a parent. Just even pick the figures for the parent without even adding for subsidy. Now you wonder if someone can get 4 marks out of 40. That is lack of examination techniques. What was there? One of the form of consideration, there was a share exchange. So when say share exchange is where the parent is going to buy shares, then they will give out the shares. So what you have to include is the shares which will be issued. The shares which the company is going to buy, use them to determine the ownership. Then the shares which will be issued, which will be given out, is what we are going to use to determine the cost of investment. Now, what are we supposed to do with those shares? Multiply by the market price per share of the parent. I'll be slow here. Share exchange, the parent is going to buy shares, then they will give out the shares. So they will give a ratio like what came with it. The parent is going to issue 2 for every 3 shares. So what are you supposed to do? You come up with the total number of shares which you are going to issue. Now those are the shares. Now, how do we come up with the value? Multiplied by the market price per share of the parent, not the subsidiary. Now, we are going to see what are they saying? They are saying amounts calculated were also added to the share capital when in fact had already been accounted for. This is very important. If the financial position will come, no matter how complicated the question will come, we only pick a share capital of the parent. Now, if there will be a share exchange, if it was recorded, it means it has already been accounted for. So you're going to see, if you answer question 1 of the same CA2.1, it was recorded. If you go to D8, it was not recorded. So here in short, student, the mistake they had made is to credit a share capital and share premium. But you were told, the student were told that this was recorded. So that was an error. Unless we are going to see when we come to D8, it was not recorded. So we are supposed to create a share capital by multiplying the number of shares issued times the nominal value. Then the excess you take to share premium. Another form of consideration was a deferred consideration. When said deferred cash consideration is where you have agreed to pay in future. So since you are going to pay in future, what are you supposed to do? You discount. So we are supposed to discount for 3 years. After discounting, then you debit cost of investment, then you credit liability. Then thereafter, what are you supposed to do? You are supposed to start unwinding of interest. What's the meaning when it's unwinding of interest? Simply start charging interest. This is very, very important. Another important point, whether you like it or not, the consolidation will come in the exam you'll be writing in June. Why? From the past practice and from the syllabus and the exam format. So if there will be fair value adjustment, when you go to IFRS 3, which is a business combination, the requirement is all assets and liability, you have to measure them at fair value. So there will be a fair value adjustment. So that adjustment, it will create, if there will be a fair value gain, it will create additional dip. So that's why I say candidates could not collect depreciation on fair value. Another important point. The challenge I've seen as student, we start only to pass, not to understand. Why? Markup and margin, it's in financial accounting under incomplete record. But even if you check advanced financial reporting, students have continued making the same mistake. So if you are here, please pay particular attention. You are going to see when I go through the chief examiner's comment also for D8, the same point will come. When you say a markup is when you express a profit as a percentage on cost price. Hope the message is clear. So profit as a percentage on cost. So in short, markup is on cost. Then margin, it's on a selling price. Now, when you be computing unrealized profit, unsold inventory will be at selling price. So if they will give you a markup, you can't multiply direct on unsold inventory. That's why you come here saying a number of candidates apply the markup without converting to a profit margin when computing annualized profit. What's the message? Unsold inventory will be at selling price. Then if they will give you a markup, change markup to margin. Very, very important. How do we change markup to margin? If it's 25, it will be 25 over 125. But if they will give you margin, then you simply multiply direct. My humble appeal, revise markup and margin. Another area, some candidates did not share impairment loss between the parent and NCI. Whether you like it or not, the exam you are going to write, they will give you the accounting policy on consolidation. When you are valuing NCI at the date of acquisition, there are 2 methods. You can use a proportionate or you can use a fair value. When you say proportionate, where you have to multiply the percentage of NCI on the fair value of net asset, The goodwill you compute is only goodwill for the parent. So if there will be impairment, you are not supposed to share. But if the company policy will be to measure NCI using the fair value or full method. Now, in order for you to use the fair value or full method, what will happen in the exam? They will give you a fair value of NCI. If they want to give you, come up the shares of NCI times the market price per share in a subsidiary. Now, when you use a fair value, the goodwill you are going to compute, it's for both parent and NCI. So in that case, you share impairment loss. So if you go through the same question, the accounting policy was to measure NCI at fair value. But student did not share between the parent and NCI. Also, it's an issue of equity accounting. When you have got an associate, you are not supposed to add the entire profit. You get a share of the post profit. So those were the comments from the previous exam. In terms of published, again, it was poor. Honestly, how can you get 0? Like the example, they brought a trial balance. There will be 11, there will be inventory, there will be receivable, there will be payable. Honestly, how can you get 0? Then you start complaining about, no, it's Zika, they want us to make fail. Sometimes you have to accept. And when you accept, it will help you. Like the example I'm giving, if published will come, they'll give you a trial balance. They will be receivable. Take note, for Zika, for every correct entry you make is half mark. You are not supposed to aim to balance. They won't give you any mark for the totals. So what's the message? They will be receivable. Simply take under current asset. They will be payable. The exam you write, you test fine. They will be payable. Take under current liability. So you can't get 0. It's impossible. Anyway, it happened. Sometimes what's impossible becomes possible. But anyway, it's like of exam preparation. You can't get 0 on published. Now, as I indicated, when you are preparing published, it's not only about IAS 1. Some students normally they will call me, Mr. Msonda, are you done with published? Yes, no, I won't come. Take note, published is not about IAS 1. It's also with other standards. Like there will be taxation, you have to know IAS 2. There will be depreciation, you have to know IAS 3. What were some of the common mistakes? In the trial balance, there was the 800. Now, take note, I advised you, what to be in the trial balance is under or over provision. If it will be on debit, it will be under. If it will be on credit, it will be over. Now, some students, they thought that was the expense for the year. So there was under provision, which we are supposed to take to profit or loss. Then the estimate will be in the note C. Then the estimate is what you take to profit or loss and financial position. Another area was deferred tax. They gave a temporal difference, but students had treated as a deferred tax. Watch out, deferred tax is a tax on temporal difference. What are you supposed to do? You multiply a temporal difference times the tax rate. This is very, very important. Now, we have got 2 types of temporal difference, of course, taxable and deductible. If it's a taxable, it means you pay tax. If it's a deductible, it will be a reduction in tax in future. So in a trial balance, they will be opening deferred tax. Then the closing deferred tax is what they will give you in the notes. So what goes to profit or loss is the movement. Although sometimes in the notes, they can also give you the movement. What's the message? If published will come, there will be deferred tax, which is under IAS 12. If they will give you a temporal difference, multiply temporal difference times the tax rate. Then what goes to profit or loss is the movement. Another important area, there was a loan. So if they will say a loan will be redeemed at premium, let's assume the interest expense is 20, then they paid 15. So it means accrued interest is 5. So if the loan will be redeemed at premium, that accrued interest must be added to a loan and present under non-current liability. What's the message? If published will come, there will be loan. If you be told that the loan will be redeemed at a premium, it means outstanding balance, you present it under non-current liability, you add it to a loan. But if a loan will be redeemed at par or nominal value, then the loan you continue showing it at a par value, then accrued interest you present under current liability. If published will come, they will give a trial balance and be preparing financial position. There will be a bank. Main current erroneously classified bank overdraft as an asset. What message am I giving you? If they'll give a trial balance, there'll be a bank. If it will be on debit side, it's an asset. If it will be on credit side, it's a liability. Despite what I'm preaching, students will be just excited to see a bank and they will make a same mistake, which is here. So take note, the bank would be the trial balance. If it will be on debit, it's an asset. If it will be on credit, it will be a bank overdraft. Question 3 covered 32, 15, and 21. The performance was poor, the lowest got 0. How can you get 0 in theory? It means we are not ready. So like what I indicated on IS32, what they tested was on convertible loan, where they were supposed to split between equity and liability, but student did not split. Another area, it was on the IFRS 15, leverage from contract with customer. Now take note, know the 5 steps. Like in this case, when they were supposed to split between a revenue recognized at a point you transfer or you satisfy the performance obligation. Then for the services, they were supposed to use the stage of completion or based on the performance obligation satisfied. The next issue was on IS21, where student failed to translate. So they are saying there was a poor response in terms of IAS21. Student failed to translate. Let me comment briefly on IS21. If it will come, it will be at individual stage. What are the 3 areas they may test you? You have to know when say functional currency is a currency of the primary economic environment in which an entity operates. Another area is a monetary item and non-monetary item. So when you are translating for the first time, both monetary item and non-monetary item use the exchange rate when you transacted. But for subsequently, if it's a monetary item, you keep on retranslating and you compute a gain or loss. Then if it's a non-monetary item using historical cost, those are not retranslated. But if it's a non-monetary item where you are using a fair value or revaluation, you have to retranslate at the time when the asset was revalued. You are going to see the same comment when you come to D8 because also IS21 came. Question 4 is on ratios. Okay, yeah, the examiners were very happy. The performance was good. So I think it's okay there. The only issue, there was only issue of limitation where some student did not comment. Great. Question 5 was on cash flow. Cash flow, whether you like it or not, it's a friendly topic. And that's why the performance was good. Despite someone got 0, then you wonder. Of course, when you are preparing cash flow, you have to know the AD. You start with operating, investing, then financing. Then under operating, there are 2 methods, direct method and indirect method. So here what was tested is the indirect method. What were some of the common mistakes? Students, they did not know the format. Hence, they did not earn easy marks. Honestly, cash flow, we started learning in financial accounting. So the message, know the format. Next item. Now, when you are using indirect method, first you start reversing those items, which are non-cash flow item, which were reported in profit or loss. The example is depreciation. Now, when you are reversing, if the item was subtracted in profit or loss to come up with the profit, when you are reversing, you have to add it. So if you come to this, what the examiner is telling us? They added a profit on disposal. So what happened? In this question, there was a profit on disposal. Now take note, profit on disposal was taken as income or as a credit in the profit or loss. So it increased the profit. Now we are not interested with the profit, we are interested with the cash. So when you are reversing, what are you supposed to do? Subtract. I will relax here. If cash flow will come, during the year, there will be a disposal. If there will be a profit on disposal, how are we supposed to handle it? You subtract. If there will be a loss on disposal, since a loss was taken as an expense to reverse, you add. This is very, very important. If cash flow will come, they will ask you to compute deferred tax. Now, what's a comment from the examiner? They ignored deferred tax in calculating tax. So the meaning, when you open a working for deferred tax paid, you have to combine both current and the deferred tax. This is very, very important. Another this one. not subtracting depreciation charge for the year to come up the gain or loss when the asset was disposed. So basically what happened here, they gave us the cost of an asset, then and the disposal proceed. So student, what they did is to compare the cost and the disposal proceed instead of comparing with the carrying amount. Misclassification of the item. So you are advised to be familiar with the heading. Use this mnemonic or if, or where the message start with operating. Operating is we are going to present a cash flow to do with the day-to-day running of the business. I is investing. It involves acquisition or disposal of non-current asset. Then F is financing. How are we financing the business? That's why we are going to present issue of shares, the loan note, and also if there will be leases. So it's very, very important. Again, they wrongly accounted for impairment loss. So if there was impairment loss, we are supposed to add back. Those were the comments from the previous exam from CA 2.1. Now let's see D8 from March 2025. The performance was good, which is good. Unfortunately, someone got 0, honestly. I'll show you what came, and you get surprised if someone can get 0 in consolidation. What were some of the mistakes? Of course, what came, there was the income statement and there was a financial position. Now, my message for you. If there will be 2 companies or 3 companies, the first company will be a parent company, then the second one will be a subsidiary, then the last one will be an associate. Now let's see here. They are saying few candidates could not account for intragroup level in both revenue and cost of sales. Parent and subsidiary, which we are referring to as a group, we consider to be a single economic entity. It's one. So any income or expense within the group, it must be removed. So in this case, there was a sale of 8,000. So what was the correct treatment is from point of view as a selling company, you remove 8,000 half mark. From point of view as a buying company, you remove 8,000 another half mark. So the message, any sales between the parent and subsidiary, you have to remove the same figure from the revenue and from the cost of sales. This will make more sense when you go through and attempt the entire question. Another important point is analyzed profit. Analyzed profit, we debit to the cost of sales. We add. Now, if you check here, students subtracted. They computed, but it was wrongly presented. Why do we add just the cost of sales? We want to eliminate or remove analyzed profit. Now, if you subtract, it means you are reducing the cost of sales, and what will happen to the profit? The profit will increase. So the message analyzed profit, add to the cost of sales instead of subtracting. Then this question, the post period was for 2 years. So depreciation for the year was 200. So what the students were tested on in the income statement only take 400, which is for the year. But when you go to financial position, you take accumulated dip, which was 800. So some student presented 800 in the income statement. It's lack of understanding. Income statement, we report what happened within 12 months. Hope the message is clear. Now, there was a share exchange. Now, I have already explained here, value the shares you are going to issue, not acquire, then use a market price. If you are following attentively, in CA 2.1, we are told it was accounted for, but students went further to add. But here, we are told that it was not accounted for. So if it was not accounted for, what were they supposed to do? Is to come up with the number of shares they issued times the nominal value, you get the share capital, then the excess share premium. This is very, very important. So what's the message? If the share exchange was not recorded, then you have to increase the share capital and the share premium. Again, the message has come here. Student did not split impairment loss because it was a full method. Then the next one, this one. When you are computing analyzed profit in an associate, you only get a group share instead of the entire amount. So this is very important. So the meaning here, if the associate was 30%, when you compute an last profit, only get 30%. Let's come here. What have you been reminded? Future. Who are the future now? Because this happened last city. You are reminded to go through examiners' reports of the previous examination to learn about the common mistakes which were made by students. I'm not the one, it was copy and paste. So I'm not the one who is telling you, is a chief examiner. Then you fail to go through. Then what are you inviting? I don't know. You are the only one who knows what you are inviting. So very, very important here. Question 2, it was unpublished. Then there were some challenges. Why there was a challenge? It was redrafting. When it's a redrafting is where there were some errors which we are supposed to collect, then you account for it accordingly. So it had a challenge. So now let me give you a clue. If published or company will come, there are two methods. One, they will give you a trial balance. Then if they will give you a trial balance, they will give you additional information. So those figures which are in the trial balance, you only record once, unless they were not correctly accounted for. Then the figures which will be in the additional information or in the notes, you record twice. Now, if they will give you what we call redrafting or restatement, my message, go through this question. Even if you check the examiner commented somewhere, I'd like the comment, we say, the way it came, it was unusual from the way they have been bringing, because from the past, they have been bringing a trial balance and additional information. So if they will say reinstate, it means you have to make some correction. So it will require you to know the double entry and the accounting standards. So this is very, very important. Then also it's very unfortunately, some students failed to prepare statement of changes in equity. Let me comment about statement of changes in equity. Why do we prepare? This report shows the movement in equity. Now what is equity? No matter what will come there is share capital, share premium, retained earning, revaluation reserve. So simply tell us the opening balances, what happened during the year, and the closing balances. Cash flow came. Now, I like this statement. Of course, the performance was poor. Someone got 0, honorable. How can you get 0 on cash flow? Now, why was it a challenge? This also is a unique question which came. Why? Students were not given income statement. Now, mind you, when you are using indirect method, you start with the profit before what? You start with the profit before tax. Now, in order for you to get a profit before tax, what were you expected is to be given a profit. But in this case, students were not given a profit. So in this case, we are supposed to open a working for retained earning. I remember someone called me, Mr. Msonda, have you seen Zika? They make a lot of mistakes. How can they bring cash flow without income statement? I just laughed and said, okay, just wait. So the message here, that's why I said, this caught student unaware. I think it has been a while where they bring when they brought a cash flow where there was no income statement. Am I communicating or preaching to you? In this question, it was a bit unique. Why? There was no income statement. So what were you supposed to do is to open a retained earnings. And after opening a retained earnings, then you reconcile to come up with the balancing figure. Now, what happens since students were confused in the exam? Few candidates went on to rewrite the question and not to answer. And the selected number produced a financial position instead of cash flow. This is a total confusion. They have told you to prepare cash flow, you start preparing. These are not the from the chief examiner's report. Then zeros, be careful with zeros. Normally, if they will give you a trial balance, there will be maybe 3 zeros. Then in additional information, they'll be writing in full. So take note of zeros. That's what was noted there. Again, IS-10 came and IS-37. Someone got 0 on theory. Then you wonder if someone did not go through the information. So there was total ignorance. So what was tested is on IS-37, which is on what? A provision. So since it was on provision, what were we supposed to account for? We are supposed to relate to the provision. Okay. Hope I'm still audible enough. Are we there? Are we there? I'm seeing
Yes,
my internet seems.
Yes, we can get you.
Okay, thank you very much, because my network seems okay. So what's the message here? IS 37, it covers three things: provision, contingent liability, and contingent asset. Now, when say provision, is there a bit of uncertain timing or amount? So now, in order for you to recognize a provision, three things must be there. It should be probable that it will be out for economic benefit. Then the cost can be measured reliably. Then there must be a present obligation. So there, they wanted the guidance whether to provide for restructuring cost. The guidance is only provide for restructuring cost where the company has created a valid or obligation or present obligation. Now, what should happen? They should communicate, or they have implemented, or they have come also a detailed plan. Now, when you are providing, only provide for the direct cost relating to restructuring. So the way it was tested, some costs were not supposed to be provided for. Future, what have we been guided? This standard, because it could feature, now, future cut dates, they are referring to you now, June and in future. You are reminded, they are telling you, start this standard. What? IS 37, because the performance was poor. Someone got 0. So don't be shocked if you can see a similar question. Then you say, no, Zika, they repeated the same question which came. Yes, you were told that they didn't perform well. So should we go and start testing you something, but we have noted there is a gap? No. Hope the message is clear. Then there was also IASC 10. Conceptual framework, I indicated which one be tested, 2018. Then you wonder how someone can get 0, because conceptual framework is highly examined. Also, they tested on accounting principles or concept. These you learn them in financial accounting. Going concern is where simply an assumption that a company will continue operating in a foreseeable future. Substance over form concept. When you're accounting for the transaction, the substance must prevail over the legal form. So this is very, very important. Again here, whom are they advising you? Future cadets are reminded that the theoretical portion of financial reporting is extremely important. And one of the areas I was advised by Zika to comment is students are not answering theory. So take note, it's not about number crunching only. And the reason you are not answering theory, it's simple. You are not studying the standards. So if you don't study the standards, how are you going to pass? Again, biological assets, IS 41. Some students express ignorance on the biological asset. The message is clear. Why it happened like this? Students are not covering the entire syllabus. Of course, those are the comments which came from the last exam sittings. What I want to encourage everyone who is here, I've advised you, download CA2.1&DA8, attempt all of the question, go through the examiner's comments, you will appreciate. So some of the key areas, I think, answering the question you would like to have been asked. Like last sitting under IS 37, they asked about measurement, but students were answering recognition, which was wrong. Inadequate of syllabus coverage, that's a key area. And the reason we are getting 0, because we are not covering the entire syllabus. So the message, ensure that you cover the entire syllabus, very, very important. What will be tested will come from the syllabus. Poor time management, failure to answer all the question, and cancellation of the question. Then also the issue of discussable. It's one area we have noted you are not answering theory. Non-compliance with IS1. It has given the format how to prepare profit or loss, financial position, and statement of changes in equity. As I indicated earlier on, IAS1 will simply give you the format. But how to come up with the figures to put there, you have to know the accounting standard. I'm not giving you a leakage. If published will come, there will be PPE, IS16. So for you to know depreciation evaluation, cover IS16. There will be inventory. So you have to know IASC2. There will be receivable and payable. You have to know the financial instrument. So take note, this is very, very important. Then fair to distinguish between financial statement and elements. Financial statement problem we memorize. We don't want to understand. When say financial statement, these are reports like financial position, statement of cash flow, statement of changes in equity. Now, when you say elements, these are items which now you find in the financial statement, like asset, liability, income, and expense. Kindly ensure that you know the difference between financial statement and the elements. Published, the common mistake is to fail to distinguish between financial statement. So they will give you a trial balance. Then the key message I've told you, when they are marking your exam, for every correct entry is half mark. I'm giving you a leakage. If published will come, they'll be payable. Take it under current liability. They will be receivable. Take it under current assets. There will be a bank. If it be on debit, take it under debit. Take it under current asset. If it be on credit, take it under current liability. So the problem with students, sometimes we cheat ourselves. No, you will be only marked if you are going to balance. So take note, the message I'm giving you, for getting a total figure of balancing, there is no marks which are awarded. Marks are awarded for every correct entry. So what message am I giving you? Aim to enter as many correct entry as possible. If, forget even about totals, then any figure which will come from a trial balance, you enter it twice. Then the issue of taxation. In the trial balance, what will be there, it's under or over. If it be on debit, it's under, increase the expense for the year. If it be on credit, it will be over, reduce the expense for the year. Then take note, when you be charging interest, ensure to revise IAS 32 and the IFRS 9. You have to know the difference between the effective interest and the coupon rate. To charge interest expense or income, use the effective interest. So to discount and unwind, use the effective. Then to determine the annual cash flow, use the coupon rate. This is very, very important. Current asset. I have even highlighted this one, please. It will be there in the exam. Some of you remember after the exam. If they will be published and they will give a trial balance, I'm not giving a leakage, but I know there will be a bank. So if it will be on the debit side, present under current asset. If it will be on the credit side, present under liability. Then of course they will give you inventory. Now take note, in the trial balance, if they will give you cost of sales, it means I've already done opening plus purchases minus closing inventory. So what will be in the trial balance is a closing inventory. But if they will give please, there will be ordinary dividends. According to IAS 32.
Sorry,
Hello?
Mr. Bon. Sorry, you broke off a bit. Can you just go back on the inventory?
Okay. Are you able to get me now clearly?
Yes.
Okay. So I think it's a network. It seems not to be stable where I am. There is no power. So I think it has affected the connectivity. So inventory. They will give you a trial balance. So in the trial balance, if there will be purchases in the trial balance, it means the inventory, which will be in the trial balance, is the opening inventory. So you are going to get a figure in the trial balance, then you add the plus purchases. Now, instead of purchases, if in the trial balance there will be a cost of sales, remember, cost of sales means opening inventory plus purchases minus closing inventory. So if they will give you cost of sales in the trial balance, it means the inventory to be in the trial balance will be the closing inventory. So you are supposed just to take immediately to the financial position. The mistake is, again, you say cost of sales minus inventory. What's the message? If published will come, they will give you a trial balance. Just take note. It's either they will give you purchases or they will give you cost of sales. If they will give you cost of sales, it means they have already subtracted inventory. So the figure they will give you only take to financial position. If they'll give you purchases, then you add the inventory to cost of sales. Then the closing inventory will be in the notes. Hope the message is clear. The next one is ordinary dividends. This one will be tested under IAS 32. which talks about presentation. Ordinary dividends we present in the statement of changes in equity, or in other words, subtract from retained earning, not in profit or loss. Despite what I'm preaching, some students will show ordinary dividends in the income statement. Go and read IAS 32. Now take note, if the dividend were proposed, there is no liability. We only account if the dividend were approved. So take note, proposed dividend should only be disclosed because there is no liability. But if they were declared, that's when we account for it. Intangible asset if it will come, revise research and development cost, and instead of saying depreciation, we amortize. Convertible loan, you have to split between equity and liability. Preference shares, if it's redeemable, when it's redeemable, the company is going to buy back, you present under liability. If it's irredeemable, you present under equity. Provision, ensure to revise IAS 37. Bonus issue, there is no cash involved, so always value them at nominal value. You get a share capital, then normally we debit share premium. Unless there will be no share premium, then you can debit retained earning or revaluation reserves. This is very, very important. But rights issue, there is cash involved, except that the shares will be issued below the nominal value. If there will be a suspense, take note, suspense is where for now you have not yet balanced, then you can put in a suspense. But as you are preparing financial statement, you have to clear the suspense. This is very, very important. Then when you come to retained earning, normally it's on the credit side. If it's on debit side, it means in the past, the company has been making losses. You can check the way it was tested in March 2021 or March 2022. Question 2, please go through that question. Follow-through principles. When Zika are marking, they follow what we call follow-through principle. The example I'll give is, if the profit for the year is wrong, then you pick the same wrong profit, you go and add to the open retained earning, they will mark you. So the message, enter as many entry as possible. Then Zika, there is no what we call negative marking. Negative marking is when you make a mistake, then they will subtract. No. So they won't penalize even if you make a mistake. Int or crew. This is very important. Every collectory entry by Zika, they will give you half mark. So from what I have propounded, what I have demystified, I can't see any reason someone who is attending here to get 0. I've told you there will be receivable payable. Every entry is half mark. Very, very important. Hope I've preached the message. Consolidation, ensure to know the difference between margin and markup. And when you are consolidating a subsidiary, use full consolidation, then associate use the equity accounting. Then group structure, write a group structure. When you write a group structure, indicate the percentage of ownership and the post period. Very, very important. Asset and liability are not time apportioned. What's the meaning here? You may find the subsidiary, you add it only for 6 months. Please, financial position will say as at. Simply pick assets and liability. Where you are supposed to time apportion are income and the expenses. Then take note, if there will be impairment, if it's a full method, you share. If it's a proportionate, you give the entire amount to the what? You give the entire impairment loss to the parent. Okay, further clarification there. Half mark is awarded by adding asset and liability. So in simple terms, whenever you enter a mark, if it's collectory, you'll be given half mark. So what message am I preaching to you? Ensure that you capitalize in the marks. So now let me go through some of the questions which I had picked. When say extract, it's not a detailed question. So if you check, this was D8. It came last sitting for D8 March 2025, question 1. Like the example, no, I had given you a crew. If there will be 3 companies, like here there were 3 companies, there was Musonda. It was the first company, it was a parent company. There was Mulenga, which was the middle, it was the subsidiary. Then the last one was Waria, which was an associate. And in the exam, most they will give you a crew. Most for P, they will say, maybe they will say a pineapple, then here they will say strawberry, then here they will say an apple. So just to give you a clue. So what's the message I'm giving you? If there will be 3 companies, the exam you are going to write, the first one will be a parent, the second one will be a subsidiary. So these two use full consolidation. Then when you go to an associate, you are supposed to use the equity accounting. So the first part was 5 marks, and what was tested, they said, discuss how the investment made by Musonda was a parent, in Mulenga, in a subsidiary, will be treated, and also in Waria. So what was tested, in the subsidiary, we use full consolidation, and they acquired 60%. Whenever you acquire more than 50%, it's a subsidiary. So there, they were supposed to use a full consolidation. Then in Waria, since it was an associate, they were supposed to use the equity accounting. So this came last sitting, which is just last sitting, and it had 5 marks. So that's what was tested from last sitting here. So you can go through just an extract there. Again, from the same question, this is very, very important. I only picked 2 notes. So if you go to the detailed question, I've only picked note 2 and note 6, because that's where most students made a mistake. I said, during the year Waria, Waria was an associate, they sold goods to Musonda, who was a parent, for 180. Then these goods were sold at a markup of 20%. Then as at 31st December, they were still in inventory. So what they were supposed to do is to compute annualized profit. You get 108. Then here you were supposed to change 20 to margin. So it will be 20 over 120. That was the starting point. That's why it says most students, they multiply direct. So just by showing 1.8, half mark, 20 over 120, half mark. Then when you're computing annualized profit in an associate, you only get a group share. That's where they had multiplied by 25%. So the message, compute in respect of unsold. If they'll give a markup, change markup to margin. If it's a margin, you multiply direct. Then only gets a group share. Now, what's a double entry? You debit cost of sales, or you debit retained earning if it's financial position. So it means reduce retained earning. Then if it's upstream, when you say upstream is when an associate is selling to the investor or parent, credit inventory. This is very, very important. If associate will come and they will test you annualized profit, there are 3 things they will test you. 1, if they will give you a markup, change markup to margin. Then compute in respect of unsold. Apart from that, you have to know you get a group share. Then if it's upstream, where associate is selling to the parent or investor, you debit retained earning, then you credit inventory. But if it's downstream, what does it mean say downstream? Where the investor or parent is selling to an associate, instead of crediting inventory, you credit investment in associate. This is very, very important. Note 6, Mulenga, who was a subsidiary, sold goods to Musonda, who was a parent. The selling price was 8 million. Then the sales were made at a profit margin of 25%. Then 1/4 of these were unsold. So since it was in the income statement, we are supposed to, in the income statement, you remove from 11 and cost of sales the same figure. Then when you come to computation of annualized profit, you get 8,000. Now, again, you find they have given you a margin. Now, since you simply memorize, again, you change to markup. So since it was a margin here, you were only supposed to multiply directly. Then why 1/4? Because unsold was 1/4. So the message, very, very important. The exam you are going to write, there will be issue of unrealized profit. What is unrealized profit? It's a profit will come because of intergroup trading, where they are selling to each other. So those unsold inventory will be at selling price. That's the first point. Since you'll be at selling price, if they will give you a markup, change markup to margin. Then we compute in respect of unsold. Like here they said unsold was only 1/4. So this is what was tested. My humble appeal, find time to go through this question. It was a good question. I went through this one. September 2024, if you check September DA8 September 2024, question 1, it was on consolidation, where they acquired 60%, which was a subsidiary. Again, there was a deferred consideration. So what was tested, we are supposed to discount. Then immediately paid cash, which is simple. You debit cost of investment to create cash. But again, there was a share exchange. Now, in this case, since there was a share exchange, we are supposed to compute the number of shares which were issued times the market price per share of the parent. So that's what was tested here. And the company policy was to value NCI using fair value. The other name for fair value is a full method. So what will happen in the exam? They will give you a fair value, or you compute the number of shares for NCI times the market price per share. Very, very important. So that's what was tested. So this is a suggested answer. So this is very, very important. So we go through deferred, we are supposed to discount. Okay. It's an extract when you go again to CA2.1 for 2024. If you check question 3, was on releases. What's the message I'm giving you? IFRS 16 releases. It's one of the latest standard. It's highly examined. You are going to be entertained in the exam. So what's the message? The remaining 2 weeks go through IFRS 16. It's a new standard. In the books of LSR, the owner of the asset, the accounting treatment, it depends whether it's an operating lease or finance lease. That should be opening statement, 1 mark. If it's an operating lease where substantial risks and ones have not been transferred, then the asset will continue appearing in the financial position, then you only account for the rental income on a straight line basis. If it's a finance lease where substantial risks and ones have been transferred, then the asset must be derecognized. That's what they tested here. So take note of that. Although it's not part of the requirement, if they'll ask you in the books of LSC, the one who's using the asset, recognize the right of use and the lease liability. Unless it's a short term or the asset involved is of low value, then you can expense on a straight line basis. Okay. I've just given you a clue. So if you check here, if someone answered here, this is a marking key I'm giving you from, this is it's not an official marking key, but I just based from my past experience. So if you check here, it was 6 marks. Theory, how to account in the books of LSR. So if you come to a marking key, what are they telling us? Just by saying accounting treatment will depend whether it's an operating lease or finance lease, they will give you 1 mark. By identifying the type, whether it's a finance lease or operating lease, 1 mark. By defining a finance lease and operating lease, 1 mark. Accounting for finance, 2 marks. Accounting for operating, 1.5. So if you check here, their variable marks was this. So this is very, very important. I've given you a clue. Normally for a theory, they give 1 mark. Then for every correct entry is half mark. So this is how they mark when they are marking. So take note of that. So the mistake you make is you just go direct, you start computing. You go through, this one came D8, September 2024 was question 4. Requirement, explain how the recoverable amount is measured and quantify the impairment loss. This is IS36, and also last sitting it came, the performance was something else. So impairment is when you compare the carrying amount and the recoverable amount. Now, what's a recoverable amount? You pick the greater or the higher of value in use. What's the mean when say value in use? Is when you discount the future cash flow. Okay, value in use. So we are saying recoverable amount, you pick the greater of value in use and fair value less cost to sell. When say fair value less cost to sell, at how much you can sell, then less cost to sell. Then if there will be impairment loss, you present in the profit or loss. Unless in the past we are using a valuation model, then there was a gain, then you can take to profit or loss. So we can go through this presentation. I'm sure our institute, they will share. You can also check on the website so that you can have the cost here. So this is what was tested there. So if you come here, proposed marking, I'm just proposing. If you know, you define the recoverable amount, 1 mark. If you determine the meaning of fair value and value in use, 2 marks. Then computation be only 3 marks. So if you just compute, the figures are correct, because that's why I said you have to know the command, what have been commanded. They haven't said compute, they say explain. That's why I said you have to know what are you going to be commanded. In life, if you want to live longer and better, follow instructions. So here you have been instructed, explain, then you want to just compute. You lose marks. So take note of that. So if you just compute, the answers will be correct. You only get 3 marks out of 6. This one also came September 2024, question 5. It was on IFRS 9. IFRS 9 is highly examined. In financial reporting, IFRS 9, which is on financial instrument, they will test in terms of recognition, recognize upon being a part to the contract, and also the recognition. So this one was on the recognition. When should you stop showing a financial asset or financial liability? In this case, it was a financial asset. We only recognize when substantial risks and rewards are transferred to another party. So if you check here, the risks and rewards were not transferred. So they had a financial asset of 20 million. Then they got from Twashuka 18 million, but the risk and reward were not transferred. So what they did recognize, which was wrong. So what was tested here, for financial asset, only recognized when substantial risks and rewards have been transferred from the reporting entity to the factor. So that's why they said, explain the appropriateness. Now, if you didn't go through IFRS 9, I don't know how you are going to comment whether it was appropriate or it was not appropriate. IFRS 9, I retested. So if you go through the suggested answer, they talked about the issue of recognition. They were not supposed to recognize because the risks and rewards were not transferred. So if you come to the marking key, explanation, how many marks? 3 marks. Computation, 4 marks. So if you only compute, you get 4 out of 7. Hope the message is clear. Again, March 2025, which is from last sitting, which came, I've told you, IS32 is likely to come in the exam. If it will come, there are 3 areas which are tested. Redeemable preference shares, you present under liability. Dividends paid, under equity. So what came was a convertible loan. Now the challenge which was here is for you to know which one is the coupon rate and which one is the effective interest. The interest normally which will be near to the amount, and normally the lower of the two is a coupon rate. So use it to determine how much you'll be paying. Then the one which will be at a far rate, and normally the higher rate, is the effective interest. So these are the issues. If in the exam you don't know how to use 8% and 10%, then you are gone. So when we are devising this, whenever you see convertible loan, it's a compound instrument. There is equity and there are liabilities. What are you supposed to do? You split. How do we split? First, determine the present value of liability. So you are going to discount the obligation you have. After you discount the liability, then you subtract from the total proceed. Then what will remain is equity. Now, after you split, equity is supposed to be constant. Then liability, you start amortizing the liability. So if you check here, we are supposed to split to discount the principal amount, which will be paid at the end. You come up to 73. Then the amount you're supposed to be paying annually. Now, if the cash flow are constant, you can use the annuity factor. So this is an annuity factor. So when you add, the total liability was 92,920. But what was the total proceed? 100. So it means the equity was the 7,880,000. So what will happen subsequently? Each year equity will be constant. Then liability to start charging interest. So this is a good question which was tested. So whenever you see convertible loan or convertible bond, it will be on IS32. They would want to test you how to present convertible, which you have to split. DA8 March 2024, not 2025. It was only consolidation. Basically, there was 80%, which is a subsidiary, and there was a share exchange. So you can see how many questions so far we have gone through share exchange. So I'm sure from here, even if you are not a prophet, you can anticipate the one which is highly examined. Of course, apart from this one, also remains a contingent consideration. So basically, they told us here. So in short, check D8 March 2024, then you compare what came in March 2025. You are going to see it's almost the same. The principle only change. So that's why it's not about answering a number of questions. If you can just answer 2 questions on consolidation, even what came last sitting, I can assure you, you get more than half of the available. So here we are told deferred was not recorded. So what were you supposed to do in this case? We are supposed to create a share capital by the number of shares which were issued, then also the excess you take to the share premium. So this was the working for goodwill. then of course there was impairment, which were supposed to be taken into account. So if you check here, if you check in the financial position, the share capital for the parent was what? Was 300. Then we had to add the shares which were issued, since we are not recorded, then the excess was supposed to be taken to the share premium. March 2024, for CA2.1, they said they acquired 40%. When you acquired between 20 and 50 is an associate, we use equity accounting. But what were you told? It was acquired at a date of incorporation. I think if you check last sitting, I think that's what happened for CA2.1. So when you say at a date of incorporation, it means when the company was formed. So it means there was no pre. So the entire amount was a post. Another important point which came within last sitting is how to handle directly attributable cost. When you buy a company, then you incur some cost. In the past, the standard IFRS 3 used to allow to capitalize, but the new standard, you're not supposed to capitalize. You have to expense. Check last sitting also, the same thing came because student did not do well. So where there was 2 million and it was capitalized instead of expensed. So obviously it came in March 2024. Check just after 1 year, it came also in March 2025. Hope the message is clear. March 2021, which is 2024, basically it was on the earnings per share where they tested the IAS 33. So take note, you have to compute basic. You only take into account existing shareholders. Then diluted earnings per share, you take also dilutive potential shares. So that's what was tested, where there was the change in the capital structure. How do we account for it? This is an excellent question I can recommend on IAS 33. So can you try to go through CA2.1, March 2024? You can see those where they suggested the answers. IAS 10 is events after the reporting period. So the example, we are reporting from January to December 2025. Then when say adjusting event, we are referring to those events which were there at the reporting date. Now we did not have information. Now we have information. Then what are we supposed to do? We adjust. Non-adjusting event happened after the period we are reporting. So since it happened after the period we are reporting, we are not supposed to change the figures. We simply disclose. The only exception, if the going concern is questionable, like you'll be told, the company, the factory was gutted by fire, the machinery, inventory were completely damaged. So in that case, we made out if the company will continue operating. So in that case, you can treat it as an adjusting event. So take note, even last sitting, it was there in D8. So ensure to revise IAS 10. IAS 23 is one of highly examined, which is on borrowing cost. So the guidance, direct attributable borrowing cost for qualifying asset must be capitalized. Now, when say qualifying asset, I remember when it came, students were just answering, it's an asset qualified to be an asset. No, we are referring to an asset which will take substantial period of time before it's ready for its intended purpose. And when should you commence capitalizing? We use mnemonic ABE. Activities are taking place, borrowing costs are being incurred, and also expenditures being incurred. So you can go through, this is a suggested answer. You can check the detailed one there on the website. March 2024, question 5. It was on the substance of the transaction. Why is it important to apply substance when you are accounting for the transaction? Because it will bring about faithful representation. The example, you can only recognize revenue when you have satisfied the performance obligation. The example, if you have paid to me tuition fee and have not yet provided the service, I can't recognize it as revenue. I have to defer. I have to show it as a liability until I will satisfy the performance obligation. That's what was tested. December 2021, it's a good question, which came. They brought income statement, and it was 20%. For financial reporting, CA2.1&DA8, whenever you come across where the company bought more than 50%, it's a subsidiary, use full consolidation. Then if it's between 20 and 50, it's an associate. Below 20% is trade investment where you use IFRS 9. So they gave us this. So when you say full consolidation, the results for the parent, you simply pick them. Then for subsidiary, if income statement will come, normally, I'm not saying always, it may be less than 1 year, so you have to time one portion. But the problem again, you start copy and paste gross profit, PBT. No, those are outcome. So you can see here, this is very, very important. So this is to guide you. So here, if you check 325 was revenue for the parent, they will give you half mark. If you just write 325 without writing total, they give you half mark. Then you add 60 is the revenue for the subsidiary. It was there for 9 months. So by mistake, if you simply add 60, they will give you half mark. But a student who are going to say 60 times 9 over 12, then it's 1 mark. Then this one also is half mark, half mark. That's why they have got 2 marks there. Same apply cost of sale. If you check here, there is no any mark for computing the total. Hope the message is clear. Conclusion. Approach, because we are running out of time and we started late due to internet connectivity, but I'll share, I'm sure the Institute is going to share this presentation. Then I'll share my number in case there are some areas we may need clarification, we can interact. Conclusion. Hope we can see the smoke, the white smoke, of course, not a black smoke, in June. I don't know if you write on 16th or 18th June. What's the message? Every correct entry, they will give you half mark. And for a valid point, they will give you 1 mark. Very, very important. If published will come, they will be receivable under asset, payable, under liability. Bank, check if it's a debit or credit revenue. Every entry. Here, they haven't said for balancing for a total. So, what's the message? Capitalize on entries, not balancing. After all, in practice, you'll be using accounting packages and Excel to be computing for you. So why should we be giving you marks for adding? Hope I've communicated something. Even if candidates reaches a long conclusion, marks will be awarded. That's what I said, they follow through. They use what we call follow through principle. What is important? Cover the entire syllabus. The Institute is going to share with you, I've shared with them, examinable item, which you have to go through. So ensure wherever I have ticked for financial reporting, ensure that you cover through. You are not the examiner to start predicting what will be there. Hope the message is clear. Please, you should not specialize. Otherwise, that is very, very risky. Take note of the item which are highly examined. If you check each question on consolidation, I was talking about markup and margin. Then you go in the exam without knowing markup and margin. What are you inviting? I don't know, but you know what you are inviting. Then later on, you complain about Zika. Please show the working. The marker will only remark what they will see. Then there's no negative marking. The example, you make a mistake, associate, you teach as a subsidiary, you add it together. They won't penalize you. So if you want to, that's what it's about entry. If they are long, they will be selecting. Hope is very, very important. My humble appeal, ensure that you read the examiner's comment from recent exams on Zika website. Check on the Zika website. If you can take this presentation seriously, pick the examiner's comment for the past sittings for D8 and CA2.1. Attempt the question, you will pass. This is very, very important. Then ensure to cover the entire syllabus, then in terms of time management. So in conclusion, good examination technique is not just about what you know, but you apply knowledge in the exam within 3 hours. So if you are not careful, you have been studying for 4 months, 6 months, you have the knowledge, but you are going to fail because you are going to fail to manage that knowledge within what? Within 3 hours. Important message or the good news for you, believe in yourself. I think we have covered a number of areas. We have given you some hints which can help you to pass. Of course, be positive and know how you are going to pass. Wishing you all the best in your examination. Of course, Zika is very friendly. Now, I know we have got a few minutes. Now there are some questions. I can attend to those questions. So I'll hand over to Mr. Katungu. Are you there?
Thank you, Mr. Msonda, for the presentation. Indeed, I'm here, listened through your presentation. Students, this is an opportunity for you to seek some clarity on the areas that Mr. Msonda has presented. Do we have any questions? And for avoidance of doubt, this recording shall be shared with you together with the presentations. Thank you. Okay, silence, Mr. Msonda, means either people understand well or wish to,
Or they were confused.
or wish to engage you outside of this meeting. So to just sum up our day's meeting, wish to just re-echo some of the sentiments that I picked up from the presentations. A lot of technical matters require you as students to read, so meaning study, and that studying that you do needs to cover the entire syllabus. You don't need to be a specialist, because you may specialize in 3 areas, and yet what we examine is across the board, and then it means you are going to fail. So cover the entire syllabus as you are preparing, okay? Know your standards. What you are reporting is guided by standards. Your financial reporting is guided by standards. And so if you don't know the standards, then it means you will get lost on questions that require you to apply your knowledge on standards, okay? Then the other thing is you have been advised to make sure that you show your workings, okay? At this level, be it in the diploma in accountancy or the application of CA, you have no multiple choice. It's only in multiple choice where you're expected to just select your answer, which can be either A or B, without showing your working. At this point, you need to show your working. The emphasis on you needing to show your working is even made more from our marking system, like Mr. Msonda mentioned. We have what we call follow-through principle. So if for one reason or the other, you have picked a wrong figure, but you correctly add the figures that you have used in line with the principle being tested, we are going to give you the mark for your workings, but the final answer will be the wrong one, okay? For instance, a 5 marks question that has 4 marks allocated to the workings, it means you're going to get 4 out of 5. So please show your workings. Show your workings so that you get marks that come from merely showing the workings, okay? Then the other item is, in addition to you showing your workings, you need to label your questions. Don't let the markers start guessing that the answers you have provided are for question 1 or they are for question 5. Make sure that you label your answers correctly. At this stage or by now, you must know that when you are writing, every new question must have its solutions start on a new page. So if you're writing question 1, you will write all your question 1. You can continue on the same page, 1A, 1B, 1C, 1D, up to F. but don't start question 2 or question 3 on that very page. Okay? So each question should start on its new page. Okay? Your answer booklets have instructions of their own. Make sure you follow them. Okay? What we have is what we call blind marking. So the markers don't know you by your name. And as a result, don't indicate your name on the answer booklet. If you do that, you will immediately get disqualified. Okay? And then the final emphasis that we wish to make is that you are urged to always ensure that you attempt all parts of questions that you have selected. Okay? If question 1 has got 5 sub-requirements, make sure that you answer, for instance, from question 1A to question 1E. Do that for every question that you do, that you attempt. By so doing, you are minimizing the loss of marks. But if you are going to attempt a few questions, and even those few questions, you do not attempt them fully, it means you greatly disadvantage yourself. Okay? With that said, we wish to thank you all that have made time for this meeting. You are urged to ensure that you make time for any such meeting so that you learn from the consultants that we engage. These are people that are very much experienced in this area. They have been involved in marking for years. So what they are talking to is what they have actually observed. So make sure that you sit in, you listen in. And above all, we wish to remind you that these meetings that we conduct are not meant to be a substitution of tuitions. We still urge you to go ahead and attend tuitions because we believe you learn better under the guidance of qualified lecturers. Okay? You may wish to know that when we accredit a tuition provider, those that you see on our website listed as tuition providers, the process of accrediting them includes assessing what kind of people they have as lecturers. So people that do not have qualified lecturers or institutions that do not have qualified lecturers, we do not accredit. So that's why we urge you to ensure that you attend tuition, because at the end of the day, we want to see a situation where you do your studies, you complete on time. Okay? Studies are not meant to be done in perpetuity. You must not be studying forever. There must be a time frame within which you are able to complete your qualification, go into industry, impact industry, and like staying on in training. With those remarks, I wish to close and once more emphasize that we shall share the recording for this meeting. Thank you so much.
Sorry, sir, just before you leave.
Hello, Mwandwe. Yes, you can go ahead.
2 questions. When you say share the recordings, they'll be shared via which platform? Through our emails or?
Yes, we'll share through your emails, unless otherwise, at the time you were registering, there was a part that required for your details, including your email address and NRC. So we are able to, if it's just the NRC number that was inputted, we are able to still track you back using that, as well as just the emails from Zoom. So we'll share using your email addresses. So a link shall be shared. Of course, this 2-hour video cannot be shared through email directly because it's too big, but a link leading to the recording shall be shared and then you can access that. So make sure that you download it in case you would want to listen to it later or share with anyone that you would want to listen to, that you would want them to listen to in the future. what you have
Okay.
downloaded to be able to listen to, because we do not keep these for a long time on our website.
Okay, and then the last one was that you're speaking of institutions for tuitions. Which institutions are these?
Okay, so for institutions that offer tuitions, I'll advise you to go to our website, www.zika.co.zm. On the menu, there's a part that says students, and that menu has a drop down which has tuition providers, examination centers. So to mention some, you have Zambia University College of Technology, mentioning them because one of their lecturers was our presenter for this meeting. We have Evelyn Horn, we have Zikas, we have Zabak, and so on. So there's an exhaustive list
Okay.
of tuition providers on that link. Thank you. And that includes Zimbabwe. For those that are in Zimbabwe, we also have accredited tuition providers in Zimbabwe. So go to the link, you will find that information. Thank you.
Thank you very much, Mr. Katungu and the team.
You are welcome, Mr. Msonda. For the students, go and prepare adequately. You are left with just about just under 2 weeks to write. Thank you.